Take a seat. Thank you. Okay. Good morning, everyone. I am pleased to introduce Mr. Isuru, who is a potential investor in our company, and he has shown a keen interest in our company, Soflogic Holdings PLC. Today, he came here to discuss about application of consolidated adjustment in group financial statements. Before we proceed, let me give you a brief introduction about our company. Soflogic Holdings PLC is a diversified conglomerate in Sri Lanka with a strong presence across multiple sectors including retail, healthcare, financial services. And we are proud to be one of the largest consumer electronic and retail country as a lead in private healthcare products.
Thank you, Mr. Thuwan, for the briefing introduction. Shall we start our discussion about application of consolidation adjustment?
First of all, a parent company refers to an entity that has control over one or more subsidiaries. Soflogic Holding PLC is the parent company as it consolidates financial statements and has control over its subsidiaries through ownership of more than 50% of their voting shares or by other means of control.
Yes, Nethmi. Subsidiary is a company is controlled by the parent company. Subsidiary companies of our company can be identified Hasini Hospital Holding PLC, Hasini Surgical Holding PLC, Hotel, Soflogic Life Insurance PLC. We have acquired 56% of Hasini Hospital Holding PLC and 55% of we have acquired the Hasini Surgical Hospital PLC.
Okay, now I have a general idea about that. What is your consolidation process?
When preparing consolidation financial statements, the parents and our subsidiaries' financials are combined line by line.
Yes, Salini. Similar such as assets, liabilities, equity and income, we can adapt to the together present group financial position, performance and the economic entity.
Furthermore, this ensures that the consolidated statement reflects the financial information of the entire group cohesively. Our Miss Hasini mentioned before our subsidiaries. So this is our subsidiaries' financial statements.
Okay, let's discuss about practically how it's doing.
Yeah, sure. All intergroup assets, liability, equity, expenses, and income and cash flow related transactions between members of the group are eliminated in full of consolidation.
Yes, Malindu, a change in ownership interest of subsidiary without the loss of controls is accounted as an equity transaction.
Okay. Then, what happens if a group loses control of a subsidiary?
We remove the subsidiaries' assets, liabilities, non-controlling interest and equity from their books.
Which means the group removes the subsidiaries, assets, liabilities and non-current interest from consolidated financial statement. Am I right?
Definitely, Mr. Isuru.
Okay. What about profit and losses?
Any gain or losses goes to the income statement. If they keep any investments, it's recorded at fair value.
Additionally, the total profit and loss for the year of the company and of its subsidiary include in consolidation in the consolidated income statement, consolidated statement of comprehensive income, and all assets and liabilities of company and of its subsidiary, including consolidated are shown in the consolidated statement of financial position.
Oh, I completely forgot about the non-current interest factor. Can someone discuss me about that?
Actually, Mr. Isuru, non-current interest represent the equity in the subsidiary not attributable to the parent. Soflogic Company NCI is a portion of the net results of operation and net assets of the subsidiary for the interest not directly or indirectly owned by this company through its subsidiaries Hasini Surgical Hospital PLC, Hasini Hospital Holding PLC and Central Hospital Limited. Also, Soflogic Financial PLC, Soflogic Insurance PLC, which are financial services are subsidiaries of Soflogic company.
Sorry for the disturbing, Mahiruni. Actually, Mr. Isuru, when we are analyzing NCI figures using financial statement of healthcare services as subsidiaries, we can identify these amounts. So, Hasini Hospital Holding PLC, then Hasini Surgical Hospital PLC and Central Hospital Limited have these amounts for NCI. So this indicates that the parent company has been acquiring more shares of these subsidiaries and reducing the NCI stake. The NCI amount has increased for Hasini Hospital Holding PLC. This could be due to various reasons such as the subsidiaries issuing new shares or the parent company selling some of its shares.
Furthermore, Thilini, actually we can identify these figures as NCI amounts in Soflogic Finance PLC and Soflogic Lines Insurance PLC. When we analyze these figures, the NCI amounts has been decreasing for both subsidiaries. This indicates that the parent company has been acquiring more shares of these subsidiaries and reducing the NCI stake.
Okay, finally, based on the provided information, NCI is the significant, especially when the parent company has ownership in the subsidiaries should consider some key points, accurate financial reporting, investor understanding and decision making are some of them. So I think you have an idea about this.
Yeah, definitely. After goodwill is initially recognized, how is it measured going forward?
Okay, I'll explain. Goodwill is measured at cost minus any accumulated impairment losses. If certain events suggest it might be impaired, you also have to review its for impairment every year or frequency.
Got it. So what happens if you find impairment? Does it get reversed later?
No. Impairment losses on goodwill can't be reversed in future. Once it's impaired, it is stayed with that.
I see. And if a business is disposed of, does goodwill treat differently?
Yes, if part of the operation is disposed of, the goodwill associated with that part is included in carrying amount when determining the gain or loss from the disposal.
Interesting. So when testing for impairment, you first reduce the goodwill of the unit if necessary, right?
Exactly. If there is an impairment, you reduce goodwill first. Then the remaining asset of the cash generating unit in proportion to their carrying amounts.
Finally, I summarize our discussion. Consolidated financial statement measure parent and its subsidiaries financial, showing the group as a single economic entity for cohesive reporting. Non-controlling interests reflect the equity in subsidiaries not owned by Soflogic Holding PLC, with changes influenced by share transactions. Consolidated statement combine financial across the group, eliminating intra-group transaction while goodwill is reviewed annually for impairment. Accurate NCI and goodwill management ensure clear reporting and strategic decision making.
Okay. Finally, I am very satisfied about my investment idea of Soflogic Holding PLC. Thank you for your support. Thank you, Mr. Thuwan.
Thank you.